Beef, what's the big picture? That's what we're talking about in this episode of The Business of Agriculture. Are you looking for productive efficiencies in growing higher yielding, better performing crops? New Fields Ag provides a complete portfolio of biological products focused on you, the farmer. Visit newfieldsag.com for more information to help you farm better. Hey there, welcome to another fantastic episode of The Business of Agriculture. Got a great one for you today because I got a great guest. His name is Hyrum Egbert. He is a beef market analyst out of Idaho Falls. He was recently quoted in an article in Drovers magazine, and I'm like, you got to get on this show and talk to people about what's going on with beef. Here's a few of the big picture items. Right now, I'm recording this right here before Thanksgiving. In the last week, Tyson announced they're going to close a major plant in Lexington, Kentucky. They're also going to go down to one shift at an Amarillo plant from two shifts, which means they're going to halve their capacity. We've got the lowest beef herd in the United States of America that we've had in 70 years. We got the whole Argentina issue. We got the Secretary of Agriculture coming out in the last month saying beef is too expensive, beef is too high. And you got Donald Trump, who allegedly loves ranchers and farmers, but then he went on to say that you got to do something about bringing your prices down. So there's a whole bunch of beef business news, and I wanted to have to talk to this guy right here about these very things, and also where we're going in the future, what's going to happen. We're going to end up having expensive beef forever. Are we going to let these guys actually make money? Is there a conspiracy? Did Tyson get together with the other big evil meat packers and decide they were going to go ahead and do this to screw cattlemen? What's going on? Hyrum Egbert, lots of stuff to cover. Thanks for being on here.
Thank you. Appreciate the opportunity, Damian.
So, big picture, and then we're going to get into all these different things right here. Let's start with the one that's the pressing one. And then we'll go back historically. The pressing one is this whole situation with Tyson. I got a whole bunch of flack, and it doesn't take much to get people stirred up in the cattle business. And I said, all right, they lost $426 million, according to one article I read, Tyson did, on their beef unit in the fiscal year that just ended at the end of September. So they're losing money on the beef. They're making money on chicken and whatever else, and pork. And so they said, all right, we got to trim things down because we're paying a lot for these cattle. We know that cattle prices are very high, record, and they're excess capacity. So I said, if you got a factory that's not running because, and I worked in a ceiling tile factory, if ceiling tiles were not selling and our raw materials were at a record high, we'd be doing the same thing. We'd say, hey, we're going to shut down or kill a shift off, not have 3 shifts running. That's really how I see it. And oh my goodness, did people come out of the woodwork to tell me I was a Packer sympathizer and I was taking the side of Tyson? I said, no, I'm just making a business of agriculture, observation, and analysis. That's what I did. That's what we do here on this show. Is Tyson doing this to screw somebody over? Was this some sort of premeditated collusion between the meat packers to screw over producers?
You know, all the information that I've seen, everything that I've seen out there, no, that this was thought about for a long period of time. Obviously, having to do something like this affects people, it affects towns, it affects whole states and the economy as a whole. But at the end of the day, they're looking at the P&L, it's bleeding, and they're making the tough decision. They're the first one to make that decision, and I don't think they'll be the last. Yeah,
so let's go with some numbers. And this article where you were quoted in Drovers magazine, that's obviously a beef industry magazine. The Lexington plant, Lexington, Nebraska, we're talking about, employs 3,200 people. Its harvest number is about 4,500 cattle a day. So 4,500 animals come in there and get slaughtered every day. And these numbers, by the way, are obviously big because people are like, oh my, wow, that's a lot. So just to give us some other perspective here, Hyrum, in the last 45 weeks, just call it basically in this calendar year, let's say, we have killed, slaughtered, processed, harvested 457,000 head of fat cattle every week. Mm-hmm. That's our average. So that means this place is a significant, processor because there's only, 450,000 get killed every week. And this is doing, a tenth of that every day. Well, I'm sorry, 1% of that every day.
Absolutely. Any small amount is meaningful, and when we're taking out capacity, any small amount is meaningful. When we take out a big plant, it's similar to what happened back in the last cattle cycle with the Plainview plant down in Texas. When that happened, it's a big deal, and you don't have a lot of places to get that meat from. And so, yeah, this is a really big deal.
And then the Amarillo, which seems to be the back burner news, is also quite significant. The Amarillo Tyson facility is going to reduce daily harvest down from 2 shifts to 1 shift. So basically halving their output from 5,500 daily processing to half that, about 2,700. So you're talking about right there, we just got rid of 7,000, in excess of 7,000 daily slaughters. And are we calling those 5-day weeks? Sometimes 5 days and then they do a Saturday?
This year we're calling it a 5-day week, yes.
So what we just got rid of is capacity for 35,000 roughly per week, right? Mm-hmm. And that'd be obviously divided that by 457,000. I got my little calculator right here. You're talking 7.5 to 8%.
That's exactly right. It is not insignificant, especially in a spot where the capacity that we're currently utilizing at these packing plants is sub 70%. So every shackle that goes unfilled, you're not able to get that meat to the customer, to the consumer.
Yeah. So here's the thing. They're not doing this to just make it so that there's a bunch of cows that are hanging around with nowhere to get slaughtered. They're doing it because there's less cattle to be slaughtered. I mean, I get it. There's kind of a chicken or the egg thing, but right now, these plants are not operating at full capacity, so it looks to me. No, I'm not a Packer sympathizer. I did own stock in Tyson at one point, but it looks to me like it was just a simple matter of we're going to get capacity at processing facilities in line with what the herd numbers are.
Well, that's exactly it. You have to right size the industry to the cattle herd you have. To what you said earlier, 70-year low in the cattle herd. That doesn't come up and down within a year or two. I don't honestly think we're going to be up to where we were 10 years ago in terms of the cattle herd. It's just not there anymore. We continue to come down and down and down a little further every cattle cycle. And I think it's the same thing here. So you got to right size that industry. And the last couple of years, we've actually brought on a couple packing plants across these smaller regional packing plants that have gone up across the U.S. So, yeah, something's got to give.
Yeah, so that's the other part. There is a plant that's a newer plant, I guess. It's in North Platte in Nebraska that's killing about like 1,100 a day. And that also was cited in this article as one of the reasons why Tyson would justify closing this one, because down the road, there's another one that's taking up some of the that's now introduced new capacity for processing.
Well, exactly. There's a lot more competition for cattle right now. Specifically, you have the sustainable beef plant over there in North Platte, and they're competing for the same cattle that Lexington was competing for. But additionally, you've gone from typically you're bringing in cattle from 150 to 200 miles away from the plant. Now, when you have such a small herd, you've got to widen that horizon. And so the same cattle have more competition than less competition.
Yeah. So these numbers, let's just go ahead and just get to the whole thing right here. It's significant. So we reduced capacity for processing by 7.5% to 9%, depending on which, the day of the week, whatever. But that seems to be right sizing with what the production is. And then let's talk about what it means for the economics. Presumably, it improves the economics for Tyson, which is why they did it. Because they said we've got to, get more efficient, and we're losing. Well, again, we lost. They one number said up to 600 million that they lost on their cattle unit last year. So 426 to 600 million, which is not, that ain't peanuts. So presumably they get more efficient, but there's not still going to be cattle that are standing around with nowhere to get killed.
No, this won't be the COVID era. In COVID, that's exactly what the case was, because the government brought down capacity. Nobody came to work. Yeah. And so you had cattle that were hanging around that couldn't get killed. In this scenario, it's the complete opposite. There's plenty of places for it to go. And really, you need the capacity level, which is currently running around 70%. That needs to be up towards 85, 90, 95%. just for packers to make money with their economies of scale.
Yeah. You mean, okay, just so somebody was wondering, when you say they're running at about 75% of what they could be running at, and it's probably never 100% because you just can't do it, but man hours, staffing, etc. But then you'd be at 85, 90% of to full capacity.
Spot on. Yes, that's exactly correct. Yes.
Okay, so let's go through then where this all goes. So you talked about the cow herd, and now we're getting into the imports. We're going to talk about the imports. We're going to talk about the pricing. We're going to talk about the consumer. We're getting all that. Before I do, I want to talk to you about my friends at Harvest Returns. Chris Raleigh and I. He's my Business of Ag group. In fact, you ought to consider joining the Business of Ag group and be like him. We get smart. We get together every 2 weeks on a Zoom call. And we talk about important stuff with guys like Hyrum, for instance, about where this industry is going. But anyway, Harvest Returns is a company that can help you fund your agribusiness. Let's say you need money for an expansion. You've got this brilliant thing going on, and you go to the bank and they're like, hey, this doesn't fit our template. It doesn't mean you're sunk. Harvest Returns has assembled 18,000 investors. They've got a pool of money. They've got investors online that essentially then, boom, say, yes, this works for us, and they can create a financing arrangement for your business to expand using investor money. That's what Harvest Returns does. So if you want to finance your business and you want to take the business to the next level, get the capital you need to reach your goals at harvestreturns.com. Go to harvestreturns.com. Learn more about how you can get started with growing your operation today. Okay, so let's talk about the herd. Been hearing this for a while, Hyrum. We got low cattle numbers. My dairy farmer that I rent my farm ground to uses sexed semen for his heifers and his top producing cows. Bottom half of the cows or so get bred to a limousine or an Angus bull, and a calf comes out black, and that calf goes into the beef trade. It's the beef on dairy phenomenon, been going on now for several years. It's because there's so much demand, and they're selling those day-old calves, 3-day-old calves, for like $1,100. A fat steer, when I had my hobby beef operation, a fat steer was about $1,100. They're getting that for a 3-day-old, half Holstein, half black calf off the dairy farms. It's because of the numbers. Are we going to stay here?
Man, I'd love to tell you that we're not going to stay here, but I think we're here for a little bit. At the end of the day, we're still not retaining heifers in any meaningful way. If the industry is not retaining heifers, that means we're not going to have those calves needed to go back into the system. So
the person that's listening to this that's maybe works in the cranberry industry is like, okay, help me out here. Explain heifer and retention.
Yes.
Heifer's a female bovine that is not yet calved. Go ahead.
Absolutely. So instead, what they're going to do typically is they're going to have a percentage of their heifers that they'll keep back to have calves. So they'll have the animals, they'll keep them going. On the other side of it, if you're over 38, 39, 40% of the total steer and heifer, so male and female, come into the plant, if you're above that 38 number, you're not keeping them back enough to grow the herd. And right now, we're not growing the herd. So with that being said, prices are going to be high until we start doing that.
And so the person that's listening to this that says, wait a minute, Damian, you always help me out understand economics very simply. The reason heifers are not being retained to have calves to grow the herd is because that heifer could just be fed just like its steer counterpart and fattened up and sold for these ridiculously high numbers. And all of a sudden you're selling a fat for, $2, and what's the number right now? $220?
Or over that. So, we're at $3,300. The industry is in terms of the average size and everything else.
So we're going to have, it's not likely that we're going to have massive growth of the beef herd. And so then the other part on the pricing thing is what can change it is consumer demand. I recorded an episode about 2 months ago. I put it out, 10 reasons why I'm bullish on beef. Now, this is before the Argentina thing, before the whole Brooke Rollins and Donald Trump, and before any disclosure. But I put it out there and I said, for one reason, the consumer has not switched off. The consumer is paying roughly double for beef what the consumer would have paid just 5 years ago. Okay? And still looks to be consuming about 56 pounds of beef per year per American at double the price it was 5 years ago. So if that's the case, the beef people should be just like ecstatic and say the consumer's paying double and still going to the store and buying it.
And from that perspective, yes, demand has been very, very robust. And we've seen that throughout the entire supply chain, which is great. You look at that, but you also look at the price that the packer gets for the product, the wholesale price, and the price that's being charged at the retail level. There is a very sizable gap there. And we continue to see that gap rise as well. It continues to widen.
Is the consumer going to stay with it?
I believe there is a point where they start getting a little antsy, but I would have thought that point was a few months ago, and we still haven't hit it.
No,
so I've been wrong there, and optimistically, I'm happy about that. I think that where we're going to see the biggest issue is not going to be on steaks, because at the end of the day, Damian, if you're going to go and get a steak, you're going to get a steak.
Yeah.
And yeah, it might cost you $20, might cost you $25, but you're getting that steak.
Yep.
Where it's going to hit, I believe, is on ground beef, because ground beef's a staple, and you can interchange that with other staples out there. I think that's where you could see this.
It seems to me that it would have happened, and we got taught at agricultural economics about the protein trade-off. And I mean, I'm talking 40, 35 years ago, I'm getting taught this, and I thought it held true. When steak gets too expensive, you trade down to burger. When burger gets too expensive, you trade down to pork chops. When pork chops get too expensive, you trade down to sausage. You go from sausage down to chicken. You go from chicken down to eggs. You go from eggs down to peanut butter. You keep trading down on a lesser priced protein because you still eat it. And by golly, we have not seen the protein trade down, and beef is double what it was 5 years ago.
Yeah, it doesn't make sense when looking at conventional wisdom here, because you're absolutely right. The demand's there. It continues to be there, and we're not seeing the trade down. Even, when I was doing pricing for JBS and other things, it was, we got to be priced here so that chicken doesn't, eat all our margin, and we go there. And I've never seen it. I still haven't seen it in my career.
Yeah, so it seems to not be holding true. What about then? Let's talk about the whole policy. And if anybody doesn't watch my commentary videos, you should go to my YouTube channel and hit subscribe. It doesn't cost anything. Just go on YouTube, type in Damian Mason, hit subscribe. I put a video out there about the USDA policy of cheap food. Hyrum, this one also gets people worked up. When eggs were getting pricey, they ran over to Turkey and got foreign eggs brought in because of the avian influenza. Arbitrarily, this becomes the thing. Arbitrarily, the Trump administration decided beef's too expensive. I'm like, well, what's too expensive? On the one hand, okay, people that lean left say if you have 5 guns, you have too many guns. Or if you're a socialist, you say that person has too much money. I'm like, it's an emotional thing because it's not a true economic thing. There's not an actual number. So saying beef is too expensive, well, what's it supposed to be? What's it supposed to be? To meet Brooke and Donald Trump's definition of not too expensive. And that's where the whole thing, and I do feel for these cattle people, like, what the hell? We're finally profitable. We've been out here breaking even forever, and now we're having a couple good years, and you're going to screw it up. Do you think that policy will it even matter?
I think
they've tanked the market just with the saber rattling. They've gotten people scared, but it hadn't changed the fundamentals of the supply problem versus the demand staying constant.
That's exactly where I was going to go, is the fundamentals. The fundamentals are still going to hold true. We still don't have the cattle. And if we still don't have the cattle, the market's going to ration the supply, and that's through higher prices. And if there's less supply out there, prices are going to be higher. What price is too high? As an ag economist, I'm sure you'll say the price where people stop buying.
Yeah.
And we haven't found that price yet here, and people keep buying. So I'm not sure what the price is that's too high for on the cattle side or on the consumer side. I don't know that it exists until we find it. And I don't think we're going to find it any other way but by taking prices up until people stop buying.
Then it brings us the issue, Hyrum, of imports. So the big thing was we're going to bring in a bunch of Argentine beef. And again, it got everybody worked up. It got consumers worked up. Well, can we trust Argentine beef? The answer is generally yes. And the other answer that a lot of people, whether they're in ag or not, I have non-ag people that tune into this show because they want to hear smart guys like you give some, analysis. We should tell the listener that doesn't tune into these, beef discussions so often. We've been importing Argentine beef for a while. It's not that much. And even if they doubled or what they said they're going to double it or something, it still isn't that much. It still isn't really significant. I think Argentina was like 1% of imported beef that we brought in last year, right?
Yeah, no, you're spot on. It's not a lot. If anything, Australia is one of our biggest trade supply partners in terms of bringing beef into this country. We need more. We need a lot more.
Oh, God. All right, wait, Hyrum. Okay. Ladies and gentlemen, what he just did right there was made it so that you all are going to go on my YouTube and I'm going to get hate mail and comments. Who's this guy? Screw him. We need more imports. All right. Here's why Hyrum said that. He's going to tell you why he said that. But to be clear, we do import beef in the United States. We have for a long time. He said Australia. We do bring in Brazilian. We do bring in Argentine. Yep, we do bring in Mexican. We do bring in Canadian. I think I probably just named the 5 sources. I don't know that we necessarily get much from European countries or any Asian countries, right? So pretty much Australia, South America, Mexico, Canada, right?
Yeah. And New Zealand. Yep.
And New Zealand. Okay. Yep. So you said we need more imports. You like the fact that there's going to be a bunch of hate mail coming my way, don't you? You just did that just to piss my people off.
Well, just no publicity is bad publicity, right?
So go ahead and explain what your position on that.
Yeah. So
why do we need imported beef?
We need imported beef because everybody's thinking it's going to affect the steaks. It's going to affect, a lot of the stuff that's at the grocery store. And that quite honestly is not correct. It affects largely what goes into ground beef because everything we're bringing in is lean trimmings or lean cuts of beef that will go into either it's going to go into your QSR, so your fast food restaurants. It's going to go into burgers there. It'll go into your TV dinners. It'll go into your further process items. Yep. And when you don't have,
if I buy a can of moderately priced sloppy joes or a canned chili, that's where, and as you said, fast food, that's where we're not bringing in steak. We're bringing in the lower end stuff.
50% of everything we eat in this country on beef is ground beef. The cattle that we do, which is fat cattle we're talking about here, fed cattle, they don't produce a lot of lean ground beef because they're fatter and they're corn fed, and that's why they taste so good. But that's why we need more and more to come from outside, because just as fed cattle slaughter is down, our cow and bull slaughter is down even more, which is very concerning because we don't have the volume. Yeah. We just don't have it.
Right. Okay. So, are we going to ramp up imports? I mean, that was the whole push here to bring beef prices down. Are there countries where the cattle numbers are just massively different dynamics than here, where we're at a 70-year low? Are these other countries sitting on 70-year highs?
Australia, it currently is at the highest cattle on feed number they've ever had in their country. So they have the cattle and they're sending as much as they can our way. Of course, now, 5 years ago, 10 years ago, we didn't compete with China to get that imported beef. Now we compete with China because China has had a taste of beef, and guess what? They like it too. So there's definitely more cattle available in Australia. Brazil, which hit last week, their 40% ad valorem tariff was taken off last week. So you could expect a lot more Brazilian imports of trim coming up as well.
Coming to us. So the Trump administration, as we record this, again, we're recording this right before Thanksgiving. And I'm thankful, by the way, for you, my listeners and my fans and my followers and my viewers. So don't forget, here at the time of giving thanks, although you'll be listening to this after Thanksgiving, I am thankful for you. I thank you very much. I'm also thankful for my sponsors. My friends at Redox, by the way. Redox is going to not be a sponsor in 2026. If you would like to sponsor the business of agriculture, if you have a company, if you have a product, if you need more exposure, more brand awareness, I've got a really smart audience, and I've got a lot of them. And they tune into my YouTube, they tune in to watch me on Acres TV, and they tune in on all audio platforms just like this. So if you want to be a sponsor in 2026, please let me know, drop me a line. But our friends Redox want you to know that you're going to be using less nitrogen in your crops. Why? Because there's going to be a regulatory eyeballs on you. Trust me. When you're putting out nitrogen and only about 1/3 of it actually gets in the plant, it tells me we're over applying nitrogen by a lot. Well, what if there's a product lineup that can help you reduce nitrogen without reducing yield? Redox has a product called RDXN, which is backed by decades of research. It's gaining a lot of momentum right here in the Midwest where I live with corn and soybean acres. RDXN is a patented, proven plant-active botanical extract that's designed to improve your nitrogen efficiency by 50% while boosting crop quality and consistency. If you want to learn more about this product and everything else from Redox, go to redoxgrows.com. That's www.redoxgrows.com. Okay. I said that I want to talk to you about the imports and then the money. So take me back to where I was before I had to go on and talk about Redox.
Yeah, so we were just talking about Brazil, and we took off, or through executive order, they took off the 40% ad valorem taxes, tariffs.
Yeah. Mm-hmm. And also coffee and bananas, which are the two things we get from Brazil because we want to bring down those costs. So, okay, do you see beef prices being down 10% at the store in 2026?
No, I do not.
You think they stay the same?
If history serves, they'll stay the same or get even higher.
Okay. I was going to say my prediction, stay pretty much the same. And if they do come down, I don't see any more than 10% give, and that's because we just figured all kinds of ways to bring in all kinds of South American beef, and then you'll have a little bit of a revolt in ag, but then the consumer might say, "Oh, well, I don't want to have much imported beef," and then they go to Walmart and they see that it's not $6.99 a pound for a pound of ground chuck; it's down to $4.99, and they say, "Okay, whatever." I don't see it being like gas prices right now have a two handle in front of them. That's significant from where we've been, right? I don't see that kind of thing happening on beef. I'm with you.
Yeah, I don't see how it's possible given the current market that we're in. That it's just the cattle are going to be more expensive still. They're not going to come down demonstrably in cost, and if that's the case, you're just not going to see it, and you're going to see more capacity come out of the system for packing.
Okay, so the person that's listening to this that's getting mad and sending me hate mail is going to say, that dude, that Hyrum guy, his name is Hyrum Egbert, by the way. if you want to be mad at him, go find him on LinkedIn. Anyway, this argument could be made. The ceiling tile factory I worked at in LaGrow, Indiana, and paid my way through college, it ain't there anymore. Actually, it's there, but it's been closed up since the 90s. We closed down Lexington. We closed down meat processing facilities. Essentially, we just start offshoring it. Hey, you know what? Yeah, you're right. We'll keep bringing in that Brazilian beef. And now, next thing you know, we don't have a capacity here, and we say, oh, the beef was cattle were getting too expensive anyhow. So we've seen this story before. We saw it with cars. We saw it with televisions. You can't even buy a cell phone that's made in the United States or clothing, right? So, is this the beginning of offshoring, Hyrum?
I don't think so. I think beef packing will stay here. Quite honestly, the reason why I don't think that there's going to be a lot of offshoring is because nobody else can really perfect the infrastructure we have to make fed cattle. And specifically,
our feed yard.
The infrastructure is just it's so immense, and it costs so much money that having grain-fed cattle is a United States thing, and that's why we export a lot of product across the world, because they want that grain-fed product and they can't get it anywhere else.
So the grass-fed thing, speaking of which, It's a niche. It commands a premium in some places. There's folks that prefer it. Fine, great, wonderful. I think it's important to always, whatever the consumer wants, and you can make money producing it. That's good. I predicted a long while ago that with excess supply of things like corn and soy, marginal acres, let's say you're in a very arid area, maybe revert back to grasslands, which then works very well for beef because you can't put pigs out there and you can't put chickens out there. But by gosh, you can take bovines and convert cellulose on rough ground into beef. That will happen, but you don't think that we are going to finish. You think that the model remains the same. You think that we still, at 900 pounds, yank them off the grass and stick them in a feed yard and corn them up to 1,400 or whatever.
I don't think the consumer's preference has changed much. I don't think it changes too much. I think the industry has to change, but I don't see it being offshore to other countries necessarily to change.
You think the industry needs to change? We talking about the processing? We talking about the feed yards? We talking about the breeds? What are we talking about? Usually,
Yes.
it's the mindset, which is the hardest thing for people to change, and especially you talk about entrenchment and mindset. Agriculture is about as bad as it gets in that terms of the entrenched mentality.
Yeah, we're pretty good at that. So, Damian, what I mean by that, and I can say is because on my posts and everything else, I have a lot of people reaching out to me and ask me about this specifically. Having a regional supply chain. You have these plants out there that are not tied to a big packer, such as a Tyson, a JBS, a Cargill, National, but to a smaller packer. And the goal is that they want to have a supply chain from cow-calf to backgrounder, feeder, packer, retailer. And I think that we're at a point now where we can take that and extend it out across the different players, and you create a much better system for profitability, even favorable lending terms, banks, things of that nature. Because if you have one of those cooperative type agreements, that's not everybody's the same, but everybody's different at different parts of
so
the
you envision this happening. In fact, and you work in a situation that sort of resembles what you just described. You're talking about a vertically integrated system. And again, the people that listen to this that are in ag might be saying, they're sending hate mail again because they're saying, no, you did that on pork. Poultry was first, then pork. Now all you are is an employee of Tyson, where you're going out and feeding their pigs and hauling their manure in the barn that you still have a note for. That's how the pork and poultry thing works. It's a contractual feeding arrangement, if you will. And you've now taken the ownership away from me. And I'm just a contract worker for Tyson. That's the argument. Now it alleviates risk. It's great for younger people that want to get into ag because then they have the contract and all that. But you envision it being a vertically integrated system and contractual production on beef.
I envision it being a shared contractual. So you're absolutely correct. I don't think anybody wants to do what has already been done in chicken and pork, but they do want to have some type of stability. And I think there has to be just as much say on the cow-calf side as there is on the packer and everything in between. I think they all have to be a part of that, not we tell you what to do and you do it. That is where my head's at. And that's what a lot of people, cow-calf operators, are reaching out to me fairly regularly now about that because I've been posting on it and they want to see that. And I think that's the key, is that you're always going to have a spot for Tyson, for JBS, for National, for Cargill. You have to, because what do they do best? They produce cheap meat efficiently. I guess you can't say cheap.
They don't produce it, but they process it. Yeah, I mean it's produced.
They process it as efficiently and as cheaply as possible. Whereas regional packers, they can't. They don't have the economies of scale. So what do they need to do? They need to sell local, and they need to showcase those local farmers, those local ranchers, those local feed yards. If they can do that, I think that's where the future is for the industry.
Yeah. So essentially, you're envisioning. Okay, it was a few years ago. the government threw these monies out there, grants to be smaller regional processors. And then there was a big debate. Well, can they actually end up working? Can this work? And some of them are in existence now because they got the money and they got the thing, right?
Yeah, no, they are.
And you personally have experience with this.
Yes, I absolutely do. And the problem is now they're starting to see the effects of the market, of the cattle cycle downturn. And anytime you have that, now they're in dire straits because the money's run out, the grants ran out.
Yeah, the federal grants and all the incentives ran out, and now they're sitting there saying, wait, we have to buy these expensive cattle, and we've got to get them processed, and it's getting pretty skinny.
Correct. That's it.
So this is the other part of it. Again, you get people in the industry, especially on the beef side, they just lose their gourd. They just become enraged over this if they think you're defending the packers, and I am not, the same as you. But I did point out, well, there's only 4 companies that control 85% of the beef. Okay. I fly for a living, 31 years. I go and speak at events all over North America. I had flight status on 5 airlines that don't even exist anymore. America West Airlines, Northwest Airlines, US Air, TWA, I keep going on, right? 4 airlines control about 80+% of all passenger miles flown in the United States. 4 banks, remember the ones that were too big to fail? Control the majority of banking in the United States of America. We broke up Ma Bell. We broke up Ma Bell back when I was a kid. So if you're young, you don't even know what that is, you can Google it when you're done listening and watching this show. Ma Bell. You know what we did now? 2 companies control like 85 to 90% of all telecom. Verizon and T-Mobile, and I guess there's maybe one of those, 2.5. So the point I'm making here is a lot of ag folks, Hyrum, and you work in the space, so do I, think that stuff that happens in agriculture is specific only to agriculture. Because this is where they work, and most people have been raised in this business, and they've stayed in this business. And I'm like, this is not an ag thing. 4 big grain companies, Cargill, Archer Daniels Midland, Bunge, and Dreyfus. Okay, great. 4 big meat processors. Yes. I said, in every other industry, there's 4 also. It's kind of where things go.
It's where things have to go when you have such low margins. Not talking necessarily about the cellular phones and things of that cellular service that's out there, but even they started with pretty meager margins. But when you have low margins, it's all about economies of scale. So you have to either grow organically or buy out your competitors in order to stay relevant. And what we've seen is exactly that. Is it an oligopoly? Absolutely. But oligopolies are fine. They're what work in a market society that we live in, right? On the other hand, the big question then has become, are they colluding? Yeah. And that's the question to ask. Not do they have 80%, which now we take out Tyson's, plant and a half, that all of a sudden that argument goes below 80%. But are they colluding? And the numbers, at least in bid dispersion pricing, I haven't. And
by the way, colluding. And when Hyrum saying colluding, he means on price. You mean colluding to manipulate the market, that either they can sell at a higher rate or buy at a cheaper rate. That's where the collusion would be, right? To set price,
or a quid pro quo on taking out a plant, right? That could be as well.
And you know what? To keep our margins to where we're profitable, we need more cattle than capacity, or just to, right close to even. And as it is, we get too much capacity. So hey, other 3 meat packers, we're going to close down Lexington. And in another 3 months, you're going to announce that you're closing down your place over here in Dodge City, Kansas, and that's what you think. Right? You think that? Okay, you said some important stuff there. You said first off, are they oligopolies? And I always make sure that my listeners are smart listeners, but if they don't have the agricultural economics background, a monopoly, just like the board game, means one company controls everything. And you say, well, does that ever happen? It does. It actually, turn on your light switch and you're buying your power from an electrical monopoly that is sanctioned by the government, wherever you happen to live, to be the monopoly. It made sense because then there are only one set of power lines that come down your street or your road. In ag, they're oligopolies, which means they resemble monopolies, but there's not just one player. And again, it usually goes down to four. And Chuck Grassley, the senile fossil that has been in public office since 1959, had these hearings a couple of weeks ago and kept talking about these monopolies in agriculture. And then he'd fall asleep. And I got so pissed off as an ag econ guy and said, no, they're oligopolies, not monopolies. But they do have pricing power, Hyrum. They do have pricing power. You know, it's not by coincidence. If you want to get to Santa Cruz, California, and there's two airlines that go there, remarkably, you're going to find out that the price is pretty much the same exact price. So that does happen. And to pretend that they don't do that is, I think, being naive.
You know, to that point, do they have price power? With their sheer size, they have some. Where it kind of comes from my point of view, is we have USDA reports that trade, and those reports tell them every single day what the price of cattle is trading at.
Yeah.
And so if those prices are published by the U.S. government saying they're trading at this price, then are you going to want to try to get that same price? Yeah.
Yeah.
Yeah, you are.
So the point is, if they truly were able to collude, they would say USDA price says it's $1, whatever, $2.40. We're going to go half that, $1.20. And our friends over here at the other three meat packers are offering the same thing. You could make that argument, but I'm not sure that it happens.
Well, they're losing money right now, and it's hard to make an argument that they're colluding to lose money.
Yeah.
That part's hard.
And then I had somebody on my social media post tell me that it was all malarkey, that they weren't really losing money. They were cooking the books. These are publicly traded companies. Like I said, I used to own shares of Tyson. And I can tell you, CEOs go to prison. Oh, yeah. I mean, I'm not saying it doesn't happen, but publicly traded companies, I'm not sure they're cooking the books. I mean, they say, well, they're deferring and throwing losses over here from another thing. Do you think that's happening?
Looking at the simple economics of it, I can't see that happening. No, I don't see it.
I'd agree with you. Do you think that they'll ever be broken up? Because I don't. I don't think we're going to break up the four big airlines or the four big banks or the four big pharmaceutical companies or whatever it is. I don't think the four big meat packers are going to get cut into pieces.
I think, and you might get some hate mail for this too, but I don't think we want them to be broken up. And simply because then you're going to produce beef at an even more expensive rate, and that rate will have to be passed on to the consumer, and the consumer is not going to be happy. So no, I don't think they will. And I would say that it's best that they aren't.
Yeah. So that's the other part of this is, there's folks that say, well, we're just out here simple cattle producers. It's them that are setting these prices at the grocery store. They're so high. Well, they're apparently not setting them so high that they're not still below break even. And that's the tough part.
Yeah. So you take a look at the Economic Research Service, and I did a post on this just a little bit ago, but you look at the last 50 years, the spread between retail and wholesale. So how much retail charges a customer versus how much the packer charges the retailer has ballooned from 13 cents, I believe it was, all the way up to $3.70 a pound. On the flip side, you have what the packer pays for the product and what the wholesale price is and what the producer price is going to the packer. And it has stayed very consistent over the last 50 years.
Yeah. So next question. And you have done work with JBS, which is Brazilian owned, and they are, if I'm not mistaken, the globe's biggest meat processing company. Yes?
Oh, yeah.
Okay.
Yes.
There's a certain amount of anger within American agriculture that we have Smithfield, which is Chinese owned, and we have JBS, which is Brazilian owned. Cargill and Tyson are both multinational corporations, but happen to be headquartered here in the United States of America. And
but
I'm not sure.
National, the other big four, right? So National is owned by Marfrig, which is also Brazil.
Yeah. So two Brazilian and two American. Does it matter?
So does it matter? I think it
does it matter
it
that
matters.
okay, does it matter to the beef producer? Does it matter to those of us that work in agriculture? First,
I see. Based on what I've seen, no, it does not matter.
because they're still having to buy the animals, and they still have to abide by the same OSHA. I mean, they might be foreign owned, but they don't. They still have to have the same specifications on sanitation, et cetera, inside those plants. Okay, does it matter to the consumer? To Mr. and Mrs. Consumer that walk into a Kroger? Does it matter to them?
I think long term it could if they breach 50% of foreign ownership into the ag industry. In their current spot, and I don't think they'd be allowed to purchase any more based on just where antitrust things are going. I don't think it matters to them either. I don't think it does.
Then what about on the standpoint of the ownership? Okay, we get that. And is there any threat? Are we under any risk? Is there something that we're not seeing, or the average person doesn't see? Are we in any kind of risk based on the meat packing as it is now?
Yeah. Damian, I thought a lot about this over the weekend. The risk could be, and I'm going to say could be, if they want to throttle back production here to increase production in Brazil or in Australia and offset that because they can produce it cheaper elsewhere. Then I think it could be a threat.
Yeah.
But
goes back to my question about offshoring. It goes back to my thing. Are we offshoring?
Yeah, fair.
Yeah. And then the other part of it is, I remember some guy that here in my hometown 15, 20 years ago, I pulled into a job site, and he started yelling at me for driving a Nissan pickup truck and that I should be buying an American pickup truck. I said, this pickup truck was manufactured in Mississippi, because it was. And then he said, well, that's not make it American. All the profits go over to Japan. I said, you can own stock in Nissan. I said, hell, I think I own a mutual fund that does own stock in Nissan. I said, do I need to have my investment advisor give you a call? And it was just an irrational, emotional thing that because I wasn't driving a Chevy, that somehow that it wasn't American. And I think that's a little bit on these. I don't know. Can I own stock in JBS? I don't know. I know I owned it.
Absolutely.
Okay, so the point is, it's a multinational corporation, but it's owned by shareholders.
Owned by shareholders, and JBS, they're actually incorporated here in the United States. So, yeah.
Where are we going? I mean, if you don't think we're offshoring, you think we still are going to have a vibrant beef processing industry. I want to see more beef animals because we have the capacity, not just on the processing, but as you said about the feed yards. And also, I do see all these acres that are marginal acres having very little necessity in an era of soybeans being produced below the cost, sold for below the cost of production. I think we could take 20 million acres out of marginal crop production and throw cows on it. I think that the best thing we can do, and from an environmental standpoint, all the Alexandria Ocasio-Cortez and talking about cow farts, the consumer's not buying that. I mean, unless you're a hardcore climate zealot, you don't even believe that. And so, in large part, they're like, that's all a bunch of crap. I don't believe that anyway. I think that we've got room to really be excited about beef. But then I do get a little bit of think, maybe these big four companies are too much in control, and they don't want it here because it's too expensive to process it here. We're gonna continue to slow this down. So, what do you think?
I think the packing industry and the beef industry has a tough couple years left before things start looking better from a margin standpoint or a return standpoint.
Yep.
It's not going to change, in 2026. I don't believe that. But what does it look like 5 years from now, 10 years from now? I think it's going to look really good. And the reason why I think it's going to look good is you have other plants like producer-owned beef, right? They're building a plant down there in Amarillo, where this Amarillo plant's going down to a single shift. They're building one that's going to come online, I think, 2027, 2028. Yeah. You still have some of these smaller plants that are coming online. I think that it's going to look really good for us as we come out of this cattle cycle. Now, with that being said, there's still going to be some more pain to be had, and there's still going to be some more packers that will go out, just like in 2013 to 2015 when we had the last big cycle. We had 5 to 6 plants that went out of business. They closed up shop.
Hyrum, sometimes aren't the plants, it's also a matter of antiquation. I mean, some of these plants, they're getting old. They're a little long in the tooth. And then isn't that one of the reasons that you could make why the processing capacity goes away? Because it's like an old Chrysler factory or something. At some point, it's too costly to try and keep making stuff there.
And most of these big plants are 50, 60 years old. They are very old. In Lexington, yeah, that was definitely one of them that probably needed a bunch of work to keep it going. Mm-hmm. Yeah.
So the other part then about the regional thing and the smaller processors, you still think there's hope for them. It's just that right now they're in the same economic buzzsaw, and it's going to be a challenge.
I definitely think that there's hope for them, and I think that there's a lot of opportunity to be had if we work together on the small regional standpoints.
Okay, I'm going to throw you another question. Automation.
Yeah.
Broilers come in at 8.2 pounds. We've got it so scientific. The broilers come in at they're consistent. They look alike. They're the same size. You can automate the hell out of a factory that every chicken is essentially within 2 ounces of the other one. Beef. How do you automate it when this is a load of Brahmas that weigh 1,900 pounds and they're as tall as a giraffe, and the next load that comes in is a bunch of little short, Hereford crosses that have some Mexican genetics in them, and they're fatting out at 1,050. You got no consistency of product, and that's not me being mean. We grade them, select choice, all that. But you're never going to automate a beef processing facility the way you could a chicken processing facility because the inconsistency of carcass. I've been saying that to my ag audiences for a number of years on stage, and that's why beef remains higher priced and chicken will still be lower priced because of that. Mm-hmm. Am I right?
Unfortunately, you're right, Damian. Yeah. I've been talking about automation for at least 7 years now in the industry. And while there are things that you can automate, there's a lot that you can't. And, and then when you try to automate it, then your yield goes to crap. And in the packing industry, if your yield isn't good,
because you're leaving too much meat on the bone, so to speak. Yeah,
exactly.
And again, an 8.2 pound broiler that is identical to every other broiler that came off of the 17 trucks that pulled into the facility that day. You can put lasers and all that. And again, the truck that just dropped off those little stubby Hereford Mexican crosses, the next one came in and dropped off, a load of Holsteins that are all, all of a sudden you got no ability to automate that.
It's really, really difficult. And, AI is getting good. Everything's getting good, but we're just not there yet.
But the immigration issue, obviously we got an administration that's beating the drum of immigrants. Since Upton Sinclair published the book, The Jungle, which was obviously an inflammatory, supposed to be expose about the evils of the meat industry, and that's been, 140 years ago, maybe it came out, something like that? 100 plus years ago.
Yeah.
We had immigrants working in the meat plants. Today we have immigrants working in the meat plants.
Mm-hmm.
Are we at risk because of that?
No, I don't think so in the least bit.
At risk of losing our labor force?
At risk of losing the labor force, yes. Sorry. On that, it does concern me 100% because these are jobs people tend to not want. You're working in the cold. Yep. You're, having to make the same cuts, and
it's bloody.
People don't.
Cow
people
shit.
Don't want to do it. Right?
Blood, guts, cow shit, cold, wet. It's tough work. Also,
yeah, it's not glamorous, and so I am concerned about that for sure.
Last big then thought on all this. If you and I both believe that, again, that the big four aspect of it, it doesn't rattle me as much as it seems to rattle so many people in our industry. There's been talk that like the big four grain merge and become big three. Not only, so we're talking, like Trump's threatening the meat industry with antitrust. Has there been a talk that the big four becomes the big two, or is it just absolutely off the table because they'll just invite too much government scrutiny?
It is definitely the latter. And
there's just too much fear of the scrutiny that would come with another merger.
There's already too much, and I know of opportunities where people have tried to purchase more, and it's just, we're not going to do it. We're not going to do it because no matter what, we're already the bad guy. If we do that, then we're worse than the bad guy. So I don't think it happens. I think if anything, you could have somebody buy the Lexington plant and turn it into another kind of plant, just not a beef plant. You could have a JBS buy that plant and turn it into a further processing plant, or turn it into, pork.
Yeah, they might trade assets. They might buy and sell one another's assets, but they're not going. Yeah. But they're not going to merge because there's just too much antitrust scrutiny over that.
That's my opinion. Yes.
Yeah, and then last one. So Brazil's got 2 of our 4 beefs. The China and the pork. I know this is a beef topic right here. Mm-hmm. Does China exit that? Does China exit that? Because here's what's interesting. It's my understanding they're not even making money. The Smithfield's not even making money. So foreign ownership doesn't mean that somehow if they're gouging us, they're not doing it well enough because they're not even profitable. Am I right about that?
Yes, you're right. Spot on. I don't know that they exit it, but just because, the pork industry in China is 10 times the size of the U.S. So they need pork. Yeah. And I don't know about that one.
You think they'll stick around? All right. Final thought. His name is Hyrum Egbert. You can connect with him on LinkedIn. I just did, and you also can follow him here. You can share this with somebody that benefits from it, because we got 430 episodes of the Business of Agriculture out there. Like I said, looking for a new sponsor for 2026. I'm wearing my New Fields Ag shirt right here, by the way. Don't forget to give them some love. Final thoughts. Beef, big picture. Processors, foreign ownership, imports, rancher anger, profits. Threw a lot out there, man.
At the end of the day, it's pretty simple supply and demand economics that we're dealing with here. And unfortunately, it's the Packers' turn to lose money, and the Packers losing money. That's going to happen, and soon enough, it'll switch away from that. And I think that beef's going to continue to become stronger. I think quality is going to get better, and people will pay for that quality. And clearly they are.
Yeah, and like I said, the fact the consumer has stayed with it amid this price increase. And I get the whole thing on social media. Beef's not too expensive. It takes 11 minutes of labor to buy a pound of beef or whatever that thing. And I'm not arguing it in any way. I agree, and I do eat beef, and I'm all about it. And I always ask the question, when political types start throwing the word TOO in there, I'm like, well, you're too rich, or you have too many guns, or you have too many freedoms, or your beef is too expensive, or you have, you're too liberal. Okay, well, what define that? It's an arbitrary statement. All right, Hyrum, thanks for being on here, my man.
Hey, appreciate it, Damian. Look forward to more episodes.
Another year or two, come back and do this again.
Be proud to.
I think so. And also, I'm optimistic about the beef situation also, because I think our quality is still really, really good. And like the beef sales are out there. The only concern I would have is that we let our carcasses get way too big, and all of a sudden the consumer sits down, has a steak that's about the size of my desk, and because they got these carcasses at 1,600, 1,700 pounds, and I know they're doing that because they want to maximize capacity, and I think it's a bad move, because the consumer eventually is going to not want a steak that's the size of my desk.
I couldn't agree more.
Bring back smaller carcasses. Bring back smaller frames, right?
Amen.
All right, his name is Hyrum Egbert. My name is Damian Mason. I very much appreciate you being here. Thanks so much for joining this show. I know it's a long one. It's a very good one. It's a very, very timely one. So enjoy this and share it as I said you can. And also, please go to my YouTube channel, hit like. Thank you very much for being here. He's Hyrum. I'm Damian, and this is The Business of Agriculture. This episode of The Business of Agriculture was brought to you by my friends at New Fields Ag. American made, American known, focusing on the success of the American farmer. That's New Fields Ag, offering a complete lineup of high-performing biological products for you, the American farmer. Visit newfieldsag.com for more.